Hello again, it's Nick here, and I want to welcome you today to our very special charity event. Can you all hear me again, and can you see the chat? Asking this all the time just to make sure. Great, wonderful. I was really happy that you all liked the idea and that you replied to it very quickly, and you decided to just join and support the earthquake victims in Nepal. So many also said, hey Nick, I won't be there. I will watch the video later on if I have time. And that's also great that people just said, okay, let's do this. And we can really help some people to get, I don't know, shelter, water, eat, food, whatever they need up there, right? It will also be a very powerful session. So what we do here is not just that we support the people in Nepal, we're also going to learn something very, very powerful that you can use right away. And the reason we do this like this is because there are many people that still try to, or that they still struggle and say, you know what, yeah, I understand the strategies, I know how things work, I even know, 1, 2, 3 setups, I like Haikinashi candles, Renko bars, whatever, but still for some reason I often miss out setups, or I cannot focus correctly, or I'm afraid to take action to do this and that. And what we do today will help you overcome some of those issues for sure. Remember, not everybody reacts the same way, so for some people it's not an issue to trade or to place an order somewhere. For some people it is, yeah, and we always try to find ways to help you to make things easier on your trading and the results you want to get, right? Because I receive so many emails, people saying, look, this is great, I did that, no problem. But then I try to do, I don't know, something else, and I can't do it because of this and this and this. And I'll take, or we take all this information, and then we try to create a workshop or an event that will help you with these issues, right? And today I'm going to show you one very, very powerful strategy where you can place orders and just walk away. You don't have to sit in front of the PC. You don't have to wait or to really wait for the setup to appear on a chart, a 1, 2, 3, or a bounce trade. You just need to do the top-down approach, your analysis, and if the time is right and it looks okay in your chart, you can just place orders, walk away. That removes a lot of stress. Okay. Now you're writing also a lot of things. I will read through that later on. How we do it, we just start like always, and if you have questions, just write them down somewhere on a piece of paper, and afterwards, if I haven't explained everything already, or you still have questions, I just answer them after the session. That's the easiest way to do this, like we always do, right? Now, before I start, let me just read through some of your comments there. Yes, you're right. That's how it is, right? You have the rules, you have everything, but sometimes we have the little devils in our mind telling us that yes, the rules are good, but look, right now this happens, or I want to trade, and it's not exactly following the rules, but I tried anyway, right? And that's the beginning of let's say the evil part that you have to overcome sometimes. And yes, what we do today will help you change this for sure. I'll give you a little outline here. Just give me a second. There you go. So making profits while sleeping, that's the headline. Sounds a little bit funny, but that's actually how that works. what we do today, I don't know if you can read it, I read it for you. It's powerful strategy number 1, and that is trading breakouts with pending buy and sell orders in trending markets for day traders and swing traders. That's what we're going to do today, at least the basic part of it that you can use right away and start practicing. Okay? Powerful strategy number 2. It's again, of course, trading breakouts. That's what we are waiting for, with pending buy and sell orders in trending markets for day traders and scalpers. It's not exactly like this one, which is also for day traders, but for swing traders as well. Here you have to approach it a little bit different. And again, we're going to have a 3 days event, but next week, okay? And don't worry, we send out all emails with all details to you afterwards anyway. And powerful strategy number 3 will be trading breakouts with pending buy and sell orders in ranging markets for swing traders, day traders, and scalpers. So here we don't have a trend at all, nowhere. We just have a big range usually, and then we look for setups and breakouts to place our orders, but as well for swing traders, day traders, and scalpers. So going down from higher time frames to lower time frames, use the right filters to place the orders. Because if you do it wrong, this strategy, if you don't understand where your targets are, and if it's smart to do so, if you place orders at the wrong in the wrong area, you can also get stopped out all the time, and you don't want that. Yeah, you want to make sure everything is set up correctly. Okay, so today our charity event, powerful strategy number 1, and again, thank you for supporting this. By the way, what I wanted to do is actually everybody who was kind and sent over the $20 for the event, I want to share your names on the website if you want that. Now, if you have a problem with this, if you want to be, I don't know, if you don't want to be named or something, you just send me an email and tell me, then I will exclude you from the list. Okay? So is everybody okay with that? Or do we have people that okay, it's fine. Okay, wonderful, perfect. Again, if you have any issues, you just send me an email. Okay, so you have problems. Does anybody else have problems with audio? Shirley says that the voice is in and out. Our sound is good. Okay. Is it too loud or is it okay? Using a new software here. It's all good. Okay. Wonderful. Perfect. So let's just start, right? You should be all able to see my charts. And what you should see is the GBP US dollar daily chart. Cool. So, just a sec. Okay. So just tell me, what do you see? GBP US dollar daily chart. Again, I have our Spartan template with only the 36 and 12 EMA, high Kinashi candles, that's it. And what do we see? Exactly right, it's an uptrend, a daily 1, 2, 3 setup, which we like. We also got our daily long signal here. So this went up 600 pips in profits, wonderful. Yeah, there we go. And yes, now if except of the 1, 2, 3 setup for the people that know how the Spartan system works, okay, Let's do the whole top-down approach. I start from the weekly chart actually. Look at this. Price is going down like that. Okay. So we had a downtrend on the weekly chart. Price did never break the 12 EMA, which is our volatility EMA, right? It broke it a little bit here, then it moved lower, and then suddenly broke the 12 EMA, our volatility EMA, and moved higher. So if I just draw a line over price action and over the 12 EMA here, we can see where the trend is changing just by simply drawing a line, right? Is everybody okay so far with that? If you have any trouble understanding what I mean, you let me know. Okay. And when that happens, we know that we might see a trend change, or at least a bigger retracement on this particular time frame. Yeah? Now I switch to my daily chart. On my daily chart, I see what happened after the price stopped moving lower, creating lower lows on the chart. It broke our 36 EMA, which is the first sign for possible trend change, right? And then it created a new high, finding this previous high from March 2015. Spiked in this area because we had horizontal resistance, right? And then it moved back down, getting close to the 36 EMA, which automatically created, if we count it from this little tiny red retracement after the price hit resistance, you see down here, price came back up, it spiked, it retraced about 200 points, and then it broke the trend line for good. So we have a trend line break, we have a new high after this retracement here, right? And price retraced back and created a 1, 2, 3 setup, which according to our basic Spartan entry rules, we have a setup and an entry right after the close of this candle to buy. Is that okay for everybody, or for most of you that know the strategy so far? Yes, right? And even if you don't, it's not a problem. I'm just doing the whole top-down approach to make sure we all understand what's going on this chart. Yeah. So we had an entry and price moved up. So this is a confirmation of a trend change after a trend line break in this area. Good. But now what? You might see this here for the first time and say, hey, great, look, entry or not, I didn't catch it, or was not there, I didn't even see it on the daily chart, and I didn't get any chance to trade this. So I'm not in that position at all. And just by looking on a daily chart, except of this daily 1 to 3, or maybe some aggressive setups on lower time frames after the trend line break here, just by looking at this, do you see any other setups to take entries on this time frame? Is there any other way to find really new setups here just by looking on this chart, except of the one we just explained? Does anybody see anything? Not really, right? Yeah. Exactly, but still, especially when the price is changing a direction on high time frames like this, we want to get in there at some point. Yeah, we want to take advantage of a new trend. And when you can do that on the daily chart, which is a chart that not many people use, unfortunately, because again, higher time frames are telling you the truth. A high time frame like the daily chart will give you the real thing, the real market direction. If you go lower, you will never really know what's going on, but you know what's going on if you use the weekly chart and then the daily chart to check for the trend direction. So the first thing, even if you use this strategy now that I'm going to teach you today, is to remember a top-down approach. Who does not know what a top-down approach is? Okay. Yeah. The top-down approach. Yes, I will explain. I'll explain everything. I just want to know who is familiar with the top-down approach. For me, it's just a question. Don't worry about it. Okay. What it means is, before you even think about taking a position, about trading, you need to know the main direction first, and you also need to know where you have support and resistance. So if you find a setup, you need to know where your next targets are, and you need to know where to place your count protection order, your stop loss order, right? And if you don't know that, then it will be really difficult for you to be successful in trading whatever product you want to trade. Okay, so you need to approach something from a higher time frame and then going to a lower time frame to find your setups, targets. You have to define, the area where you place the stop and how you trail a stop. That's what a top-down approach does. Do you understand now what I mean in theory? Yeah. So very, very important. Remember, only 1%. They say maybe 2, but I'm not sure about the 2%. Of traders are doing that. They actually go to a higher time frame, and then they go to the lower time frames to find entries, right? Most traders, but you cannot call those guys traders actually, most people don't do that. Just because they don't know that it's important, not because they don't want to, they are stupid. It's just because they don't know that that is very, very important, and that gives them a big advantage over everybody else. Okay, so from now on, if you really heard that for the first time, or you have never done it, write it down on a piece of paper that from today on you're going to do your top-down approach before you even think about placing any positions in the market. Okay? Great. So we want to find a trade on this pair after we have seen this trend line break, okay, and after confirmation of a trend change on this particular time frame. Because on the weekly chart, yes, it went down. After price broke that line, yeah, we switch to the next chart, which is a daily chart. On the daily chart, the price broke this area, moved up, find an area of resistance, not the highest point. Yeah, you see this is a previous high, but in an area where the price is ranging, let's say, or is playing around for a while, and where you find the most touches on a line, on a horizontal line, that's the area of horizontal resistance and support. So in this case, because price stopped in this area before it went down, when price reaches this area again, this whole area, not by the pip, the highest points or the lowest, but between the bodies and the tails, or where you find the most touches. This whole area is horizontal resistance for us. Okay, so what does the price do? It will, when it's volatile, it will break your resistance, your trend, if it's trying to actually also change trend. It will break it fast, it will move up quickly, so we have a lot of volatility. And then when it's finding this previous highs in this example, an area of resistance, it will bounce and retrace. Okay, so it's breathing in. What does the market do? It's a living thing, right? All these things, these candles here, are real people trying to make money. Yeah, most of them are failing, but it doesn't matter. They try. So price is going up, it's breathing in, it's breathing out. And in a new trend, especially in an uptrend, it will create a higher high, and then will create also a higher low, meaning yes, it will retrace in and breathe out, but it will not move back down where it came from. Because when that happens, if price does not create a higher high and a higher low in an uptrend, and it goes right back down where it came from, then you don't have a direction anymore. What do you have? Let's assume if price did not stop here, but it would go back down right to this area and then bounce off here. What would that be? Any ideas? Exactly, right? It was starting to range because the price did not stop after breathing out and creating a higher high. It did not create a higher low. It just moves lower, breaking again all the EMAs, and then we don't have a clean direction anymore, right? But what we are looking for is a trend or a trend change. In this case, it doesn't matter if it's already in a trend or if we had a trend change. We need to identify a trend, and you can only see a trend if the price, especially after a major trend direction short here, is changing that. You can also see only see that if the price creates a 1, 2, 3 on the chart. In this case, a higher high, a higher low. Yeah, sometimes the retracements, the breathing out part, is bigger, sometimes it's smaller. But when you check, when you start on your previous little retracement here, this little red candle here, and you see the price is going up and then it's going back down, usually we would like to see ideally a retracement back to this red EMA, which is the 36 EMA. That's the one we use. Okay, 12 EMA for volatility, 36 EMA trend following EMA. Yeah, ideally. Sometimes price will only retrace to the 12 EMA and then go back up. Sometimes it will retrace only with one candle or two, sometimes with 5 or 10. Yeah, we are interested ideally on the higher time frames in a retracement of about 50% plus. That means when you check the previous low, and it's like in this case on the daily chart 650 points, and it retraces like 400, that's more than 50%. So that's great. Okay? Yeah, it does not have to answer the question. It doesn't have to touch the EMAs exactly. It's just for you to see if the price is volatile and if the price is actually moving in a trend or in a range. Because if a price is trending, you will see that the 12 EMA and the 30 or the 36 EMA will always follow price. So in an uptrend, the 36 EMA will stay usually below price. Yeah, and in a downtrend, as you can see here, oops, sorry, when it went down, price usually stays, the 36 EMA stays usually above the price. Yeah, so the 36 in a steady, smooth trend is actually your trend line. Does that make sense so far? Just want to make sure we always understand the basics and understand what markets do before we get into the setups. Yes? Cool, great. So can I continue, right? Now we have done our top-down approach quickly again. Weekly chart, downtrend. We have a powerful blue line here. The 12 EMA is in this case the volatility EMA. Also in this case the trend following EMA, because price never retraced back to the 36. That also happens especially on the high time frames, right? And then we can still draw a nice powerful line on the daily chart. We saw this trend line. Price tried to break the 36 here again, but it couldn't stay above it and moved below again. So still short, short, short. And then it decided to bounce a little bit and then create this higher high, higher low, 1, 2, 3 over that line, which confirmed the trend change. So from short we went too long. Okay, and now we say, great, I didn't even know that the 1, 2, 3 is something I can trade, so I didn't do that. Or just an example, okay? But people still want to trade when price is going up. Yeah, and if they didn't, if they want to trade higher time frames and they didn't catch this, now what do you have to wait for? Swing traders, people that trade daily charts. Many of our members, like myself, love daily charts, right? So what would they wait for now? What do you have to wait for to actually get into a new trade if you missed out that one here where we had a perfect entry? What do you have to wait for now? And I'm referring, talking to the guys that know the Spartan basics system already. What do you wait for now on this time frame to find a new entry? Yes, 0.3, a 1, 2, 3. There we go, right? You want a pullback, a retracement. You want the price to breathe out again, and finding ideally, if possible, the 36 or a support line if you can draw that. So how do we do this? In order to draw a line, a powerful trend line, basic stuff, we say we want to see like 3 touches. That means price has to go up or down, in this case up, retrace. It has to breathe out at least 2 times so you can start somewhere and connect this line. So in this case, from here to here, it's only 1 touch, and you have to draw the line a little bit weird. So you can also start from the previous retracement here, this little one, touch the low of this 1, 2, 3 between the bodies and the wicks and the tails and extend it. Okay, it would look like this. That means that if the price retraces back to this line, the 36 will also slowly follow and stops in this area, like red candles, because we're using high Kinashi candles, right? And then bounce off here and then give you a white candle again. This would be another 1, 2, 3 on the daily chart. Make sense so far? Great. So that means that if you missed out that on the daily chart, 1, 2, 3, 4, 5, 6, 7, 8 days, 9 days, probably take another 2, 3, 4 days if it really wants to go down. So with other words, can take like up to 2 weeks before you get a new setup, which if you only trade daily chart is not a problem for you. That's just how it is, right? With swing and position trading, you don't get setups every day. But many traders say, especially new traders or people that have a little bit of experience but haven't seen great results yet, they want to trade more. Makes totally sense because you want to grow your account a little bit quicker than just waiting for daily charts, or you don't have a huge account where you are happy enough to trade daily charts with low risk and make good percentage over the year, right? So with other words, let me just read something. Yes, so exactly, yeah, you need the price to get back to here, and then only when you get the white candle you would have another daily 1 2 3. But then there are other things that you have to consider, which we are not going to explain right now because that's not for today anyway, right? I'm just saying that if you know the basic top-down approach, if you have a basic understanding how the markets work, and you use what the markets usually do, you use the 1 2 3s, the ABCs, right? That on this time frame you actually have to wait for the price to create another 1 2 3, and that can take a while. Okay, so because we're not going to do this today, but we needed this for you to understand how the markets basically work. Let's just continue. Let me get rid of the lines first. Okay, so that is what you would have to wait for. And as I said, this happened, price moved up, but you said, hey, I missed this, or I didn't know that I could have traded this, and then it's going back up. What about me finding entries in between here? Can we do that? Do you think there's a way to find setups on the way up? Yes, exactly. Now our most of our members know this stuff, so it's unfair. Of course, right? You could just go to a lower time frame, look for 1 2 3s there as well, saying, look, okay, weekly has changed, daily is we have a confirmation on the daily chart. There is a daily 1 2 3. Now if I switch after this daily 1 2 3, after I have that confirmation, to my next time frame, which is the 4-hourly chart, you'll see that you will get chances to take trades there as well. So for instance, you got a tiny 1 2 3 after this daily 1 2 3 as well. But when I look at my entry daily, just to make sure you understand, from the daily I switch to the 4-hourly, right? If you look at this candle is closing so high on the 4-hourly chart after this tiny 1 2 3. Okay, this is our weekly trend line break, the change, that you might say, hey, look, this is way too big. This candle is really huge. So according to the basic rules, we want to find a candle that closes between 0.2 and 3. This is just too big, right? So I don't take this. I maybe have to go to the next time frame, to the lower time frame, find setups there. Let me do that. Now here I find 1 2 3s on the 1-hourly chart, entries here, retracements back to the 36 here, another chance here. So can you see that we have always ABCs and 1 2 3s every time we switch to the lower time frame, and mostly retracements back to the 36. Can you all see that? Yeah, just focus on what I'm saying for now. Okay, great. So according to the basic rules, you'd say, hey, look, this was the daily 1 2 3. I didn't catch it. Here it's ranging a little bit. I didn't like it. You know, just trading 1 2 3, and afterwards here I got a 1 2 3. Price retraced to the 36 EMA. If I missed that one, price actually did it again. Retraced back to the 36. Now I have another 1 2 3. It's the same one, just with an extension, and I have an entry here because the price broke that 2 to 3 line, a close over there, and an entry. Correct? And afterwards I have only retracements to the 12. Here I have another one to the 36, and at some point price is out of steam and it's changing the direction. But that is usually what basically people looking for, right? If you don't catch a setup on the daily, you switch to the next time frame, which is the 4-hourly. Sorry. On the 4-hourly chart, if you don't catch it there, or you don't like how it looks, you can even switch to the 1-hourly chart and try to find your setups there. Ideally, price retracing back to the 36 EMA. Do you understand the basic 1 to 3 technique? It's just basic stuff. I haven't talked about entries here or stops or trailing stops. It's just the basic, let's say, thought or thinking process, the way we go from higher time frames to lower time frames. Okay? Right now, if you want to use the Spartan system, the basic Spartan system, saying, look, I missed the daily 1 to 3, I didn't like the 4-hourly 1 to 3, I don't like how it looks on the 1-hourly, it's a little bit ranging here, which we are going to use. That's what we're going to use today, actually, right? These areas. But I'm just focusing on my basic 1, 2, 3s. So now I want a retracement back to the 36 ideally. And if I can draw a support line, would be great. And again, the 36 EMA is your support line. So in this case, 1 touch, 2 touches, 3, 4. Okay, then the angle of your line is changing because price is moving up quickly. You have to draw the line like that. You extend it, it's ending up here. You extend it, it's ending up here. And then the price is moving lower, breaking that line anyway at some point. So let's say you didn't catch the daily 1 to 3, or didn't want to. You found this 1 to 3 or this 1 to 3, it doesn't matter, both are fine. Okay. You find an entry because a candle broke your 2 to 3 line. Come on. Yeah, and it closed above your 2 to 3 line. That means here you go long, splitting your positions if you want to multiple parts using the basic rules, and then placing the stop always below below 0.3 on your 1, 2, 3. That would give you a stop of about like 70 points, right? And then you would take your incremental profits and leave a position as long as possible, or targeting, of course, the next major resistance area on the higher time frame. This is the basic way to trade in a trend. Is that basically fine? Do you understand what I'm trying to show you here? You don't have to remember all that. I just want you to understand how markets basically move and how you would look for entries in a trending market so far. Yes, right? Okay. Let me zoom out. And with other words, okay, entries, account protection orders below 0.3. You want to split a position. Let's say you go for the next resistance area, somewhere in this area. You measure the distance and say, look, okay, cool, I have a 1, 2, 3, I have an entry. Next major resistance about 300 points away. I have a stop of about 70 points because you place your stop 10, 15 pips below the lowest point and below your trend line. And you say, great, this means with a stop of 70, if I split my position into 2 or 3 or 4 parts, let's say 3, our basic way to do it, right? We'll say, okay, I'll take profits at 70 pips. I'll take profits at 140 pips, 2 times the stop. And then I'll leave the remaining part to maximize the profits and try to reach next resistance coming from those higher time frames, right? So great way to do it, and it's again basic 1, 2, 3 trading, and you should all understand now basically what markets do, yeah, just in this first 40 minutes. Top-down approach, weekly chart, find the main direction, go to the daily chart. If you have a trend change, like in this case, that's why I use this example. Wait for confirmation, let the price breathe in, let the price breathe out, and then let it go. And then you look for setups. If you miss the setups, you switch to the lower time frames. Wait for another higher high and higher low on this particular time frames, like 1, 2, 3s. If you don't like them on the 4 hourly, you can go down and look for those on the 1 hourly chart. Are we all okay so far? Before I continue, because now it's getting interesting. I mean, it's already interesting, of course. It's just that what we do today is not 1, 2, 3s. I just want you to understand how the 1, 2, 3s work, so you can actually go from there to what we're going to do today. Everybody, not only 2 or 3 answers, right? Just want to make sure. Yeah, you had a lot of 4 hourly entries and 1 hourly entries here, yeah, using the 1, 2, 3s. But again, that's not what we're going to actually do today. That is just the top-down approach, and for the guys that are very new to it, that they understand what markets do. They create these 1, 2, 3s all day long on all time frames, and you need to approach those correctly. Okay, I think that's a yes for most of you. Great. So I continue, right? Do we have any questions here before I continue? Do you want to ask anything? Not today, right? Usually, especially for if you want to look for day trading and swing trading setups, if you have a powerful trend, down to the 1 hourly is more than enough for what we are going to do today. And we don't need to go into lower time frames, because that will then we get sidetracked from our topic here today. Okay, that's next, how to avoid stuck in a range. That's what we're going to do. We're going to do this, so don't worry. What else? Eric, why 12 and 36? This is just a number that I liked, got to actually love over the years. Okay, like the 12 EMA is the volatility EMA, meaning that if the price is really, really fast, it will just go back, touch this area, and usually move on. The 36 is just, you can also change it to 38 or 40 or 35. It doesn't really matter much, a few numbers, okay? 36 is just the one that I have seen over the years is giving me always the best touches, like when the price is retracing to that, sometimes by the pep it stops there, not always. So in combination with my trend line, the number works nice. That's all. Yeah, simple things. Okay, and as I said, for what we do today, we don't need high key Ashik candles, but this is what we like most here. Heiken Ashik candles are just easier to use. You see the power of buyers and sellers in each candle. So if it's white, buyers are stronger. If it's red, sellers are stronger. So that is great information, and it gives you a clean and clear picture on the chart, yeah, as Renko bars do, for instance. And that's why I like those better than anything else. Okay, but again, as I said to you, we don't need it for what we're going to do today. You can use whatever you like, as long as you see and understand what I'm going to show you right now. So do we need a recap, or do I continue? You tell me. Do you want me to go over it like in 2 minutes, just quickly? Okay, great. Okay, wonderful. Now we have done our top-down approach. We know the direction. We know the daily chart has given us a setup. Okay, I'll just get rid of the 200 EMA and the 633. That's all you need here. Okay, now we want to trade with orders in trending markets, yes, but we don't wait for the classic 1, 2, 3 setups to appear in the candle to close before we enter. We want to place the orders before price goes somewhere, and then just move away, do something else, or go to sleep, right? If it's late. And you want to catch entries during this trend, especially when you missed out the basic setups, yeah? So still we need the top-down approach, because without the top-down approach we'll never figure out if the price is ready for us to place orders. We know it went up, and we still use our trend change confirmation 1, 2, 3 because it was very like a couple of days ago, and it's very fresh, but we still want to look for setups here. We know the main direction. Now we switch again to the 4-hourly chart. Okay, we do it like this. What we don't do is looking for classic 1, 2, 3s. You will see the 1, 2, 3s, yes, but that's not exactly what you are after. They are helping you to make the decision, but you don't necessarily need a perfect setup for you to place trades. Okay, so GBP US dollar 4-hourly chart, this was your daily confirmation that you have a trend change. And why is that important? Why do you think it's important that we know that we have a possible trend change coming from higher time frames? Why is it important that we have a confirmation that the price is actually confirming on higher time frames that it wants to go up? Why is it important? What do you think? Jeff said it's powerful. We get the direction. Don't want to enter in the wrong direction. John, yeah, there we go. We can write exactly, yeah, we can be in there for a longer time. We keep on trading with the trend. Ranjit in order. 2 possible entries. Okay, yes. Yes, you're all right. That's it. We still want to maximize profits and want to trade ideally in the direction of the main trend. That's what we're going to do today, right? Yes, you can trade against the main trends. You can trade in both directions. But today, we want to focus on a trend, getting into that with orders and trying to stay in that trend for as long as possible with a part of our trade. Okay? Exactly. So now that you know that this pair is mainly moving up, but it will of course breathe out and retrace, you want to look for entries and placing some orders, and hopefully this thing goes your way. That's what you want to do, to trade in the direction of the main trend. You go to your 4-hourly chart. In this case, look at this. Our primary, our previous example where we had this 1, 2, 3. The 12 is crossing the 36 EMA up. It's moving up again, and then the retracement and this breakout here, right? But we are not looking for 1, 2, 3s here. We just use them as an, I wouldn't say excuse, as a reason to watch closer. Yeah. So what happens here on this time frame? Yes, it is a higher high, higher low, and it still looks like a 1, 2, 3. What about if we go back where we were before on the 1-hourly chart? Same thing we did before. We just look at it differently now. Okay. So does that still look, this whole thing, like nice 1, 2, 3? Yes or no? Doesn't, right? Because a 1, 2, 3 usually using Heikin Ashi candles has a main direction up with a lot of white candles, and usually without interruption or in between a couple of white, but then going back down with red candles trying to find support before it's continuing the main trend. Okay, what we have here looks different. We have a small 1, 2, 3 here on this 1-hourly chart. Okay, let me get rid of this. Is this still a 1, 2, 3, a valid 1, 2, 3? Just testing you guys now. Is this a nice 1, 2, 3 after your daily 1, 2, 3? Price going up, creating a higher high, creating a higher low. You need to identify those to understand, okay? Yes, right, it is. What about the next one? 0.1, 0.2, retrace it back to the 36, giving you breakout, breaking out of here. So is that a 1, 2, 3? Yeah, it's not bad, right? I mean, we don't, if we have a 1, 2, 3, we need a higher high and a higher low. Here what happened, if that's 0.1, 0.2 is a little bit higher than the previous one, right? 0.3 moves a little bit lower than 0.1, so we never want to see a price moving lower on the long 1, 2, 3. It has to create a higher low, but because it spiked, it was only there for a couple of minutes or something, and then actually stopped there again. So it's 100% retracement and moved back up quickly. It's still valid. It's not perfect, but it's valid. Okay? Trend is up, exactly. Now what about the next one? It's a higher high. Price comes back to here. Yeah, it's kind of the same thing again. It's like 100% retracement, but we still have a higher high. So is it still a 1, 2, 3, even that it's like white candles ranging, coming back? Would it be still a 1, 2, 3? on that 1 hourly chart. Yeah, with a little bit of experience. Exactly, that's probably the right word for it. It's an ugly one, right? It's not a perfect 1 to 3. Yeah. And what do you start seeing? You see a lot of 1 to 3s with a little bit higher highs, but price is kind of always coming back where it started. So the retracements, the price, look after here, price was down at 150, 170, let's say. The next 1 to 3, it came back to that again. Even after creating a new high, it came back to that again. So is that what we are looking for in a powerful trend? It's not, right? We want our higher highs, higher lows. We don't get that here. We still get the 1 to 3s. We still get higher highs, at least to that point, but then not anymore. So what about the next one? Price moved up a little bit, came back down. So yeah, it came back down. What do we have a higher high now? Here. Nothing, right? So do we have a lot of volatility since this last higher point? Not that much anymore, right? It's choppy. Yeah, exactly. Exactly, that's what we got. Sideways moving. So now what? I know the experienced trader said, you know what, I don't care. The main trend is up. I have support at that point. So I take those 1 to 3s. And yes, applying the rules and everything, it will still be a great trade. But we are not looking for 1 to 3s. We look for 1 to 3s only for one reason. Because we want to figure out if the price is still creating higher highs and higher lows, or if it's stopping doing that on this particular time frame. And yes, when you see price retracing always back to the same levels, even if you get a higher point on this chart before, this is when you start watching closely. The most important thing is that when you see that the price stops creating higher highs and higher lows, then that's where you watch closely. Okay? You want to write that down. You are in a trend, but when you see on your lower time frames, even if the higher time frames look very, very powerful like that, when you switch to your 4-hourly charts, where still everything looks okay, but then you switch to the 1-hourly chart and you see that the price, like in this example, is not creating higher highs anymore and higher lows anymore, then you watch closely. Please write it down. Exactly, we are getting there, guys. I do it really step by step just to make sure even the new people don't, get lost in translation. So is everybody okay so far? You write it down. Okay, great. So now we are at our 1-hourly chart. We want to trade with the main trend, but we are looking for a lack of volatility. Price should not create higher highs anymore or higher lows. And then you don't have to draw those 1 to 3s. I just did it for you to practice so you understand what you have to look for. And this is not an easy example. That is probably a very difficult one. That's why I chose it. Okay? First thing you want to do, you know the main direction. You say, okay, daily is up, but for some reason it's losing volatility at that point. What would that mean? Maybe price does not want to move higher in the end, even if the daily chart looks like that. Maybe it wants to go back down on the daily chart at this point, and tomorrow it will break or will go again back to the 36 support, or maybe trying to move below the 36 and follow the main trend down as it did here. Could that not be possible? What do you think? Not every time we get a higher time frame 1, 2, 3, this actually works out. Most of the times it will, but not always. Yeah, of course it's possible. Everything is possible when you trade, right? So you have to be prepared. Now when you look at it and say, look, oh, there was a 1, 2, 3, hey, there was another one, I didn't trade anything, or I missed it, or I don't do the 1, 2, 3s, right? But look at this, price is not really going anywhere anymore. And after that, after seeing that the price found a previous low, the same level, I'm not that convinced, looking at this time frame, that this will go up. I hope it will, because if you are in a new trend, if a trend is changing and you are in right from the beginning on the higher time frame, you could stay in for weeks and months sometimes, right? That's what we do, but not always. So again, you want to be ready. What you do is you simply take a trend line and try to connect and find lows at the same price level. In this case, this is the body, this is the spike. What you do, you draw the line through that. Okay? So look at this. Not the lowest points necessarily. You just need to see that the price stops at a level where you draw a line with more than 2, 3, 4 touches, ideally 3 and more touches. Yeah, so you draw a support line close to the lows. Yeah, because remember, price is not creating higher highs and higher lows, so you don't have a line like that. You need a horizontal support line like this. Do we all get this so far? Wonderful. Perfect. You don't know yet if this is going to stuck for a long time, or maybe it will go down up. Ideally, because you still have support, right? Check your 4-hourly charts and your daily chart. You'll see that if you connect all your lows, here and here and here, even on the 1-hourly chart, this support line exists. Okay, and when the price is ranging sometimes, and you draw a horizontal line, and at the same time you find also support line, because we are trying to find trades in the direction of the main trend, right? Then this combination of a horizontal support line and an existing trend support line from higher time frames, it's a very, very powerful combination. Yeah, so draw the lines, main trend is up, check for support lines on the 4-hourly or daily chart, and if you find that this line works on all your time frames, then you have a really powerful line. Yeah, and that is really not difficult. If you practice a little bit, you'll see how easy that is. Okay, you just have to remember, you have to write these things down so you remember next time. Top-down approach, main direction, support and resistance lines, ideally 1, 2, 3s, because without those you don't find a support and resistance line, a trend line, right? And after doing this, going to the 1 hourly chart or the 4 hourly chart, look for range. And this often happens for me, let's say in my time zone, overnight. That means Asian session. So when I have, let's say, a big powerful 1, 2, 3 on a daily or 4 hourly chart, often during Asian session in a very powerful trend, the price starts to range. Not always, but very often. Okay, and this is the area or the time also where we like to watch very closely. Now in different pairs this happens also during all the other market opens and times, right? I'm just referring to because I'm located in Europe. So for us, Asian session, our night, we often in a trend see a range overnight before price decides to either retrace or continue with the main trend. Yeah. Now, this is what happened here. What about highs? And again, this is a difficult example because you cannot just draw a horizontal resistance line like that and say, look, here is my this is my horizontal resistance line, because price spiked. Yeah, it moved higher. We had still higher highs, not higher lows maybe at that point anymore, but we had higher highs. So you cannot really draw the line like that because it wouldn't be fair. It wouldn't be real. Now that we look back, yes, but if you look at this live, that's not the way you would draw the line in this at that point. Okay, the way you would draw it is a little bit like what happens to this here? What happened? Just give me a second, guys. Let me grab this here, extend it a little bit. You would not do it like this, but how would you do it? Any ideas? You still want the most touches in this, let's say, range, right? Upside down trend line, Michael says. Yeah, kind of a wedge, exactly, right? Yeah, that's it, guys. So you would say, look, I have a lot of touches here, but it's going down in a slightly downwards move, right? So you would draw it like this. Yeah, if you see price touching here, at that point you have 1, 2, 3 touches, and what happens? Price actually moves back up, bounce again, goes back down. So now you have the 4th touch. Yeah, that makes this line here powerful, because now from here you can start, you extend it actually. Yeah. Say, great, wonderful. So when that happens, it doesn't matter. Here it's the 3rd time, the 3rd touch. Here it's the 4th. Wherever, whichever you use, if you place the orders at the correct place after the touch here or after the touch here, it will be the correct place if you draw the lines correctly. Yeah, so you have a little wedge after your daily 1, 2, 3. The main direction is up, and you have now a resistance line and you have a support line, not at the highest levels between the bodies and the tails, with the most touches ideally. So is everybody let me just convenient here with those lines? Is everybody, has everybody those lines on the chart like this? And are you okay with that? Okay, do we have any questions about this? Do you maybe disagree, or do you think there's something you want to add or ask or reply or say, whatever? Because there are many new people in this room that don't know exactly how we do things, so I just want to make sure we are all clear. You can do that as well, right? You can also say, look, I have all that, so I'll do it like this. Is that what you mean? Exactly. It's okay. Both are fine, because as long as you have your 3 touches, what is important for us is that we find the lowest and the highest points. Yeah, not exactly by the pip, but the area. Okay, so it doesn't matter. This line is the same line you're referring to, just drawing a little bit higher. It's the same thing. This is coming, remember, from the daily and 4-hourly chart as well. So you have a combination of that and that in this area anyway. Okay? Now, let's assume you have your 3rd touch here, 1, 2, all these others. Price is spiking and you have this white candle in making. You don't know that this afterwards will happen yet, because you just don't know, right? It could just go up, it could go down, whatever. But by knowing that the main trend is up, and knowing that you have a lot of support coming also from your higher time frames plus your horizontal support, what would your favor, let's say, trade be, long or short? You have a place an order. You have to place an order now. Exactly, right? Main trend is long, so ideally we want to place a long order. In this example, I show you why. The reason before I give you the details, right? If I check my 4-hourly chart, I know that I have a lot of support here. If I check my daily chart, I know the 36 is down here. Here, this is where we are looking to place orders, right? So if I know that I have an uptrend, and I want to trade long, and look in this example for resistance, where do I find next resistance, which would be my next targets as well for this trade, right? It would be the previous high, in this case in combination with some highs I had before, which is just easy to spot on this chart, meaning that if I look for long setups here, I have targets between 200 and maybe 300 pips minimum. Yeah, then leave alone the higher time frame targets, yeah, like weekly charts. But on the daily chart, on the higher time frame, knowing that I had a daily 1, 2, 3, my target of course would be at least the previous high in combination with all these lows, so 200 to 300 pips. Compared to if I would look for a sell order, I know that I have horizontal support coming from all this area, from here to down here, in combination with a 36, and I would trade against this main move now, and my target is here between 70 maximum and 100 pips. Yes or no? Do we agree on that? We do, right? So what is smarter to do? Long or short? Exactly. I go back to my 1-hourly chart. I say, great. I would prefer, because of all the reasons, to go long. Yeah. But it could also be because it's ranging that the price in the end decides to go down. And I know that my targets for short are smaller than my targets for long, which are from here to up here, or much higher compared to support down here. Now, when you sit there, you will get like a lot of thoughts. Like, what should I do? Should I take the long? Should I place the order? Should I go short? Should I do both? What should I do? Because you don't know what will happen. Yes, with a little bit of experience, you know what's probably going to happen, but you don't know for sure. So in this case, two choices. If you want to trade ideally with the main trend, which I would suggest probably new traders should focus on that, then you place a long order only, and that's it. Now, if you say, you know what, it could go either way anyway, and why not even 70, 80 pips up to 100 is better than nothing. So I'll choose to place orders in both directions. Yeah, you can do that as well. But what do you have to consider? It's always money management. You'll say, if I take the long trade alone, main direction, okay, I will risk up to, with a little bit of experience later on, let's say 0.5% or 1% if you're getting really good at this, after you've made already 20-30% of your accounts, of course. Okay, and that's it. Or I want to trade in both directions, but now you have to split the risk, saying, okay, if I want to risk all in all 1% now, I will risk 0. Let's say 7 for the long and 0.3 for the short. So I risk a little bit more for the long because it's the main direction, and a little bit less for the short order because it might not work out in the end and then go back up. Okay? That means that you have to place an order to go long here if you want to go with the main trend alone. If you want to do both, you have to place an order over resistance for long and below support for short, with less risk on the downside, more risk on the upside with the main direction. So if it's 1% all in all, just a simple example, then I would go for 70% long, 30% short in risk. Do you understand that? You don't need to hedge at all. It's not hedging. I'll show you why. Okay, you don't have to hedge at all. Okay? How do you do that? Again, this is your wedge. Let's go and zoom in. It looks a little bit bigger. These are your lines. At that point, somewhere here, you have to place orders because you don't want to sit here. You have identified your range or wedge. You don't want to sit here forever and say, you know what, it has to go somewhere. So what you do, you place an order to buy over here. So how far? If you look at the previous touches in this area or the extension of your lines, you wouldn't put it like 5 or 10 pips above it. It's too close for the 1 hourly chart. Yeah, so you go for at least 20 pips plus spread over the line to place a buy order. This is your order to buy. Where do you place your stop? That means that if the price decides to get out of this, it moves higher, like in this, during this candle, it would place your trade in the market at this, in this area at that point up here, right? So where do you place the stop loss? The account protection order. That's how we like to call it, right? Now the stop loss sounds so negative and bad. We don't like that. Yeah, you want to protect your account. Where do you place the stop? Okay, so you would look for the lowest the lowest spot here. You have the line there, but you don't want to place it there. You want to place your stop at least 10 pips below the lows, at least 10 to 15 pips. Okay, so you have an order to buy, and then you have a stop. So this order to buy goes with this stop down here. If you say, okay, great, I place 2 orders because this might want to go down in the end and it will not go up. So what do? You now have to place also a short order, so a sell order, right, below here. How do you do that? You place it below that because look, this stop from this long is about 10-15 pips plus spread below the lows. Your order to sell would be, what did we say at that point? About 20 plus spread. So you would sell here. What I'll change the color. That's your sell order. Okay. Where do you place the stop for this one? Only 1, 2? Come on, everybody. $10 to 15 pips above your range, right? So it really depends, as I said. In this case, you can only draw it like this. So yes, you have to place your stop here. And it really looks different every time you do it, depending on how big this range and small this range is, how big the spikes are. So we are going to do more examples, but I'm just need to make sure we get the basics right. Exactly. So what happens here? Price moves up. It will execute this order. You are long now. You're protected with a stop of, in this case, 100 points, which on the 1 hourly chart GBP/USD is okay. It's normal. It's nothing big really. Yeah, 100 plus. And if it goes short, you have a stop of about 100 points again. So what happens, because you know about money management and you don't expose the account with both positions to more than 1%, you're good to go, right? So if you don't have a big account, you have to use probably micro lots. If you have a bigger account, just make sure this whole thing isn't more than 1%. And 1% really if you already have grown your account by 10, 15, 20%. In the beginning, I would go for less, 0.5% or even less, to slowly grow the account, right? That's important money management basic rules. If you respect those rules, it's almost impossible that something bad happens to your account on long term. But if you are gambling, then of course you get punished for it. The market will kick you out at some point for sure. Yeah, and that's why you always need to follow the rules. So yeah, you have your long and you have your stop in place. In this example, price moves up. Do you only have one position when you trade long or when you place the orders? Or would you split each order into several parts? What do you think? What is smart to do? Yeah? People that are not used to it, I would at least split it into two parts, at least, just to get used to it. Why? Because what we now do, you can also do as an intraday and scalping trader alone, meaning doing it on lower time frames, but it needs a different approach. That's what we do next week, right? But it doesn't matter. In this case, a 1 hourly chart is really great to practice. And yes, you want to split the position into at least two parts to take profits out at major resistance and leave one position if it makes sense, if you can see on your charts, like the weekly and daily chart, that this has a potential, that this trend has a big potential, and that you could stay in this trade for a longer time than just a day or two. Yeah, that's why you always want to split a position into at least two parts to start with, yeah, and create a win-win scenario. In this case, price moves up, and when it's reaching your 100 pips profits, okay, at that point, sorry, it's now the wrong color, but you get it. At that point, you cannot lose anymore anyway. Yeah, and if price moves up, let's say your target is much higher than this 100 pips, because you're targeting the next resistance area, your green level here, which at that point would be like 200 pips, twice the stop. You already created a win-win scenario. That means if one position is still running, you cannot lose anymore anyway, even if you don't trail any stops. And you can leave this one, monitor it on higher time frames, and set new targets. So price starts hunting your targets, not your stops. So you can always set higher targets to the next resistance level, and then you can still decide if you want to keep it or get rid of it. Okay? So always keep in mind, you always want to think long term. You want to think big and say, no, I don't just want to make 100 points. If the market can give me 2, 3, 400, 500,000 pips because it's a volatile pair, because it's really trending, then you want to maximize profits with the remaining part of the trade. Always make that thinking a habit. It goes for everybody. Okay, don't think in terms of, oh yeah, 100 pips is great, let's take it and let's be happy, yeah, about it. No, if it's worth it, if the higher time frames show you that you can have bigger targets, you try to keep one position to maximize profits. Make sense? Basic stuff for now. I just want to make sure today that you really get the basics, the foundation, that you can start practicing on and make some pips already. Yeah? Okay, cool. Let's go back to our entry chart. We do the same thing for the short. Now, it's slightly different because you don't have a big target like you have on the long. And if you check, if you have a stop of 120 points and the target is only 100, yeah, maximum 190 to 100, that's not a good. It's not good math. I'm bad at math, but I know that 120 is more than 90, right? So if you have a stop of 120 and your target is about 100, that covers more or less. It's 1-to-1 more or less, right? So what you do here, if you split the position into two parts, you make sure you cheat a little bit and make sure you get your first lot out close to 1-to-1. If the stop is about 100 plus spread, that the target is also 100. If you don't have at least 100 pips target, more or less 90 is okay, 120 is okay. It doesn't really matter that much. it's okay, right? Then you can do it. But if you have a 100 pip stop and the target is only 30, 40 pips away, then you don't consider the shorts in the first place. Okay? You can still keep one position running here as well, because if you wake up next day and this thing is going down 300 pips, then yes, you took out the 100 pips, but the remaining position is still running. Then you can do your top-down approach and say, hey, look, this decided to go down. It might find the lows again, and then you do your math, the calculation, say, look, next target 300 points. Let's place my second target in this area. And if it's really going fast, you can always take it and move it lower so the price can hunt your targets, not the other way around. Like people often like to place a trade, a stop, and then they widen the stop because they still hope that the price might retrace. We don't do that, right? You can always let the price hunting your target, but never the stop. Yes, today you want to focus on day trading and swing trading setups, therefore 1 hourly and 4 hourly charts, Kim, okay? Are we fine so far? I know I ask that every 5 minutes. That's important. I really want to make sure you go out immediately and start practicing. So what does that do? If you have a range here, price does that. And you place your orders, and the orders are at the right place after doing your homework and your lines. You can just walk away, and after, don't forget to apply the money management, right? And you walk away. What does it do? It removes stress almost 100%. Yeah? It removes the fear of placing trades. People are just afraid often to place trades because of bad, let's say, not only bad thoughts, but bad habits, trading habits. Yeah, people just often are not sure. They lost a lot of money, so they say, yeah, it looks good, but what if it goes against me? So remember what we did in the Renko bar course, right? People think small. They think about what if I lose instead of thinking, hey, let's make this a great trade, hopefully, and if it does go my way, I'll maximize profits, right? That's what you want to think about. And here, this will help you a lot because you place the orders when the market is ranging, then you close the PC and you go out, do something else, and you don't go back and check every 10 minutes. Of course not. Yeah? So what's the question? It's the same. You can do the same thing on Renko bars. It's the same. It doesn't. That's why I said you can do it on those Heikin Ashi candles. Let me get rid of Heikin Ashi candles here. Look, you have bars now. One color, not even colors. You can still identify what's going on. What about classic bars with no colors in there? We can add colors probably. If you want to bars up, bars down, let's do it like red, bull candle, whatever, blue, bear candle, again red, more or less. There we go. You can still identify that the price does not create higher lows anymore, and at some point no higher highs anymore, right? Do you see that, guys? It's the same thing. Even if you get rid of all the EMAs just to practice, the EMAs are there to help you seeing the range and trend, because if the EMAs are crossing, the price is crossing the EMAs up and down, then you know it's arranging. But even if you get rid of all of those, you'll still see when the price stops creating higher highs. Yeah? Let me get rid of trend lines, everything. Look at that. What do you see here? What about here? You can draw it like this, or you can also draw it like that. You have enough candles. It's a little bit ranging, isn't it? Even tiny places are ranging, but again, that's not for today. This is for day trading and scalping. Look at that. Here's what you just did. Look at this. Okay. Even down here. Oh, sorry. That was not what I meant. Yeah, this is really here only for scalping in lower time frames, right? But you get the point. The candles don't matter. Even down, even here, during that range on lower time frames. Do you see that? When price stops creating. Okay, this is also 1, 2, 3, so it doesn't count because we get a 1, 2, 3 here. But if you just ignore the 1, 2, 3, you still can see the touches in these areas between the bodies and the spikes. Can you see that, everybody? Look at this. Look at that. And later on, if that is over, you have still this. Yeah, so this, and then afterwards this. I know it's probably a little bit too much for you right now, guys. I'm just showing you that it doesn't matter as long as you find support and resistance with more than 2 and 3 touches, and even if it's only one time frame here, you can always find a little range later on here again. Do you see that, everybody? Okay, right? You can go back and start practicing like this, identifying this all the time. Now, of course, this is not enough for you to trade. You still need to top-down approach in the main direction, but you can use this always. Look at this. You will get a lot of touches on lower time frames here, not for today, but you can practice. This is looking like that. Here, main trend is up in this case. Yeah, don't ignore that. So you want to be careful when you see something like that against the main trend. Yeah, I'm not saying every single little range you're spotting you're starting to trade in both directions, but you get the point. Okay? Was it a little bit too much here, or was I too fast? Great, so let's go back to our template to make it easier for us. Easy is good. We were here, right? We make it quick now. You understand what's going on. You had your long with a stop. You had the short with your stop above here. And now you see it's not hedging because let's say price is going down, okay? And it will execute your short. But then it decides to go back up. It will first stop you out and then place the long order. So it's not hedging at all. Do you understand that? You don't hedge anything. Now, one position gets always killed before the second one is activated. Wonderful. So in an uptrend, like here, you will focus on a longs ideally. And here, yes, you get a 1, 2, 3. Now for the new people that didn't know what a 1, 2, 3 is, that's where it becomes handy. And it's helpful because you will draw your range now, knowing that, look, I don't have a higher high here anymore. I don't have a higher low, but I can draw this, and then I have a little wedge. And so what I'll do, because the price is, let's say, didn't create the higher point on the chart, you draw your line like this, and it's squeezed here all the time between those areas for many hours, and say, okay, because of the main trend up, I place an order to buy. But if the price wants to retrace more, let me check on my 4-hourly chart. So if the price wants to retrace, it'll probably retrace back to the 36 on the 4-hourly chart, or the extension of my trend line, which at that point looks like this, right? Sorry, you do it on the daily chart, it looks like that. That's just the extension. Here's your 4-hourly chart. This is the line. So if you go short, you know that 30 to about 70, 80 pips maximum, if it really wants to go. Yeah. But ideally, you want to focus on longs because of the main trend. And you have to check, if I enter here with my stop over this, a smaller wedge, it will be like 60, 70 points. Is it worth it? To my trend line is 80, 90. So less risk on the downside, bigger risk on the upside, because here, daily chart again, set up here, it already bounced on resistance once, so now it's pushing. So we are aiming for the next resistance area, which is up here, and this would be 300 points again. Go back. Here's your line with a buy order, again a stop of about 70 points. 300 pips is great. So even if you say, okay, I'm not sure, so twice the stop and then I'll leave the last position running, also great. Powerful trade. And if something changes, you will have time to consider eventually a trend direction or a retracement, because the price has to breathe out at some point, right? It moved up 700 points, found major resistance, and did not retrace. So if I see a daily red candle in making after 700 pips move, it would be normal if the price wants to retrace back to my line or the 36, meaning this could be a 300 to 400 pips retracement. So is that something you would consider trading with this strategy? The retracement of 300 or 400 points? Yes, no? I didn't want to cover this today, actually. I thought it was too much, but I'll guess we are all okay so far, and you understand everything, so I can add this little bonus here. Yeah, some people say no, some people say yes. So that is really up to you. If you find a setup and you don't have a stop bigger than 300, which you shouldn't on the 1 hourly chart, right? Okay, why not? You can do this because you have a big target. Okay, look, when I draw my 1 hourly trend line, which is a powerful trend line now, here in the 36 EMA, price creates here, sorry, a lower high. It's starting to range. Look at this. So when we identify the range, we say, look, the main trend is up, yes, but price also created, sorry, crap. kind of a lower high at that point, and it reached already major resistance. So I place two orders. I can place a long, I can place a short, and if the price wants to move lower, in this case, let's say here, so it's a small, like 40 pips thing, it moves down 40 points. If you trade against the main trend, you might want to take profits a little bit earlier. If it works out, great. But look what happened here. Price went down. You maybe get lucky with your first lot. It gets back up and it places the long orders as well. So making profits here or not, it also places the long order, yeah, and then it kicks you out again. So in this case, if you got lucky, you got one lot, but everything else got stopped out. So you got kicked out of this one in both directions. Do you see that? Does it mean that the strategy is bad? No. It just means price is finding an area of resistance. It is not clear yet what you want to do, so sometimes it will just drop and it would be easy profits, and sometimes these things happen. But after that, what we found out is that price still created a lower high on the chart, and then it started to stay below the 36. Okay? And after that confirmation, this big lower high, it's easier then to look for setups if it's making sense. Okay? So for example, right now what is happening? And again, sorry, before I forget, if you apply your nice money management and you know that you placed an order really far in an uptrend, because look, price already moved 700 points. So placing long orders here is of course risky. Placing short orders is also risky because you don't know which way market will go after a big move like that. That's why you have, if you enter late anywhere, always make sure you risk less. Like in this case, maybe 0.5% or even less than 0.5%, okay? Just to make sure you catch the direction. And sometimes, yes, most of the times you will make profits. Sometimes if you trade against the main trend and you go in both directions, you get kicked out. Yeah. It is always smart to look for those ranges after a retracement. Yeah, after price settled, and find one of our EMAs and started to range there, not in the middle of nowhere. Yeah, something to consider. If the price here, look, it went back to the 12 at least. Here, okay, also, yeah, it's like between both. Sometimes you'll find it's starting to range in the middle of nowhere, far away from the EMAs. Then it's tougher. Yeah, if the EMAs, if the retracement happened close to your support line, close to the 36, that's ideally where you want to place your orders, because this is a confirmation the price wants to find support, and your trend line or your trend line following EMA, the 36 EMA. Everything far away from that makes the trade more aggressive. Therefore, you have to apply money management rules and make it really like a low risk trade. Here again, it's a good example. Look at this. Is the price trending here? What is going on right now? I know it's already a lot, guys. I'm finished like in 5 minutes, okay? It's ranging, right? Did it get back to our trend? Like if I draw a trend line, you cannot really draw one here. This is a lower high. And then sliding on price. Using the previous retracements, it would look like that. So did price get back? It got back once here. Did it get back really like to our 36? Like, did we see like a good retracement? Not really, right? So if you trade short, if you place orders, sorry, you'll have two orders. You'll have two options. By looking at the daily chart, this could retrace, as we said, back to here. And that would be what? 200 points, correct? If we get lucky, it might also retrace to the 12th, finding horizontal, previous horizontal resistance, which now is support, right? That's one way. If it wants to go up, then we have to check for the next resistance area on the weekly chart, which would be probably about like 200 points away again. Yeah, those highs here. With other words, you would place an order now against the main trend. It would be a retracement trade because the daily chart is retracing, and you would take it not really close to a 36 to resistance area, right? So right now it's moving down. So if that moves lower to here, that would be an area where you could place an order to sell if targets are big enough. So we said daily chart, if I find an entry here, could be 150 points, right? 150 points. You have also horizontal support here. You have an area of support here, 1 touch, 2 touches, 3 touches. So you want to make sure you place your orders below that area, right? And then you have a stop of about 70 points, because now you have to place a stop over this range. Yeah, so you have a 70 to 80 pip stop with a target of 150 for the first and maybe second position, because you trade against the main trend. So is it worth it? Yes, no, what do you think? What's going on? We have so many people in the room. Where are all the answers? I know it's a lot. I try to squeeze in as much as possible in this session. Again, it's all recorded, guys. Remember, it's a charity event, so I do it actually for free. I just wanted you to, we wanted to help the guys for sure in Nepal, and that's why I will upload it anyway, so you can watch the video afterwards. No worries, right? Yeah. So what you do? Why don't you do it? It's the best way to learn something is to take action. So why don't you place some orders? Do it on the demo account, of course, right? You have to practice this many times. So what you do is place an order to sell below the lows. Okay, 15 pips, 20 pips. It's not that volatile now. To sell and a stop over your range. And look, the actual range, here are the highs. This is the line, okay, to make it easy. It's not that nice compared to those ones, yeah, but it's just practicing, and you also trade against the main trend. So right now we're doing something really aggressive. Therefore, less risk, 0.5%, 0.23% for the first time, just to get used to place the orders. Yeah, place a short, have a stop over the range. So about 80 points. Then place a long order over here with the stops below that. Yeah, but still over the entry, so you don't have a hedge. And just leave it. Make sure you have only like really low risk. Place your targets. Just do it with one position. If it's the first time, don't place two positions. Just do it with one. And then for now, target, if you want, not 150 points, target 100 pips or 80 pips or whatever, 1-to-1 with a stop, just to get used to it. And do the same thing for the long. Yeah. So are you doing this? Who is doing that? Taking action, practicing on demo. I'll tell you right now, if you get used to this, that alone without anything else is very, very profitable. And if you get used to all the strategies, doing it as a day trader, scalper, in a range, in a trend, not in a trending market, but in a real range on higher time frames, you combine all that and only do this, place orders and leave, you'll see how relaxing and profitable this is. That's crazy. Yes, do on demo. All of you, right? Just do that. Great. So now, this is the strategy that I'm sharing with you here because it's already a lot, as I said, and we leave it where it is. Entries with a main direction, ideally risking less against the main trend, close to a support and resistance line of the 36 EMA, looking for targets on the higher time frames, trying to keep one position open and maximize the profits. Now what about the stops? I had the question already. When you create your win-win scenario, let's choose the first example down here. Price hit your first target, right? And you have one left. In a trend, what will the markets do? It will create 1, 2, 3s, higher highs, higher lows, higher. In the end, even if they start ranging in between, they will get out of the range and follow ideally the main trend. So that's why when you start, I would suggest you trade only longs in uptrends, not both directions, because sometimes it might spike against you and it kicks you out and then you're out on both sides, you know. So just get used to it by placing positions in the direction of the main trend. Okay, then what do you want to say, guys? I'm getting older. Okay, what about the stop? So you take the stop and you trail it to break even, of course, just to make you feel better if the price hit your first target, which is usually 2 times the stop if you have 2 positions, right? When the price creates a 1, 2, 3, which is confirmed, meaning up, down, higher, low, and then creates a new high, you can then also change or draw your trend lines at that point, right? You have, they come from, in this case, it looks like that, sorry, like this, right? And then the trend line on this particular time frame will change the angle like that. Yeah, so what you do, every time the price creates a new 1, 2, 3, you take the stop. Here's the stop. So many lines. Let me get rid of some. Here is your stop. You take it from your break even, trail it below the line. Price is creating a higher point, you trade it below. You always trail it a little bit higher. So at that point, price stops creating higher highs. Okay, you can either take out, of course, the position if you see that, or if you just trail the stop, it will kick you out anyway. Yeah, simply as that. So So I answer questions now. Just don't write everybody at the same time. Let me just read. If the first target is hit 121, do we move the stop? Okay, that's what I just explained, right? Okay. What about news? Okay, look. When you see the range appearing, yeah, candles are getting smaller, and it's starting to range. You know the main direction, everything. You want to check the news if you do scalping, especially, yeah, and day trading. Now, if you do it on the 1 hourly chart or the 4 hourly chart, like in this example, the 1 hourly, if the news are not NFP or something really big, it will not affect the trade usually. Yeah, it maybe plays around a little bit up and down. It could kick you out sometimes if you cannot wait for the news. Because look, you're placing orders. If you have to wait for the news and say, okay, I have to go to sleep and news are in 2 hours, then it's not worth it waiting for the news, right? Unless it's non-farm payrolls or something like that. So you can kind of ignore the news if you do that as a day and swing trader. If you sit there and you know that news are out in like half an hour, you could say, okay, you know what? The range is too small. I have a 30 pip stop here. Maybe this makes the markets move and it kicks me out, so I'll wait for the news to be released. Then I place the order. Of course, makes sense. Yeah, but that's all. Yes, no, guys, we said 5 p.m. London time, right? Yeah, 5 p.m. London time. So it says 7? No way, really? Nobody said anything. Send me an email, guys. Email says file, right? Okay. Hey, Jeff. Hey, we have to fire Jeff, everybody. He's teasing us. Jeff, are you there? But hey, guys, no worries. It's all recorded, right? It's all recorded. It's the same thing. And remember, the 3 days event starts next week anyway, where we go very, very deep into everything anyway. I had to squeeze everything, the basic rules, entries, exits, and top-down approach in this session. I thought it takes an hour, but it took 2 hours. It's better that way. So because if I talk too fast, then half of you will probably not understand it, even if you watch like 10 times the video. So it takes a little bit longer, but at least we get everything done here. Just give me a second. Oh, thanks a lot. Great, nice to hear. So yeah, we'll start actually next week. It will be May. Let me check the dates. I don't say anything wrong. May 26, 27, and 28, where we do the full workshop, 3 days, explaining the whole strategy for swing traders, day traders, and scalpers. You can combine it. You can use it, as I said, with your normal classic candles, with Heikin Ashi, with Renko bars, without, with 1, 2, 3s, without. It doesn't matter. You can use it as it is, and it's very, very powerful for sure. We will send out emails for that probably later on today or tomorrow. Is there any other question? Do you have any other question about today? Yeah, Renko bars. We will send out emails. We will do Renko bars very, very soon, again, live and everything. Okay. Now, you can trade it anywhere. It doesn't matter if you use. It's a good question, actually, right? You can trade it on MT4. You can trade it wherever. It really doesn't matter. It's you just need the charts, right? You need the charts. Okay. Yes, guys, we send emails out with discounts and great prices and everything. The thing is not, you know what? I would like you to make thousands at the beginning and long-term millions. Yeah, so focus on your success, get it right, and then it doesn't bother you a couple of dollars for sure. All right, it's very important. Just focus on your long-term success, on profits, and start right away. Don't think too much about details. You know, will I be able to do it? You know, maybe I'm not good enough. Maybe just be positive, guys. Focus on the strategy. It works. Grow the account steady. Yeah, that's it. And I'll help you as much as I can. And yes, I will, as I said, announce all your names if you don't mind. For this event, because we send it to Nepal for sure. Now we haven't decided yet which company we send it to, because there are many charity organizations where they just don't send the money, or they just send a part of it. So it's not easy, actually. I'm Googling for like days, and I'm not 100% sure. So if you know a great company that is trustworthy, where you, I don't know, have some connections, or you know that people actually really get the money, or they really support those people, send me a link. Yeah, I was thinking about UNICEF, but then I heard some funny things there. You always hear something about everybody, so it's not easy. That's not easy, but we'll figure it out for sure. Yeah, we have to be careful there. Okay, guys, that's it. I really have to go. Kids just came back, and they are really loud, probably in the background right now. So I'm not sure if you can hear those. So we have to stop for today. Okay, thanks for the link. I'll check. Teresa said, place an order. Well done. Yeah, just practice, guys. There we go. We upload the video afterwards. Yeah, we are finished now anyway. So catch up with you soon, and I hope to see you there next week for sure. Yeah, I will send everything. I will send everything you need. Great, I'm happy you liked it, guys. Wonderful. Okay. Hey, Jeff, did I forget anything? Is there something I have to say that I forgot, or something like that? It's all good. Okay, great. Thanks for the feedback. Yeah, thank you very much. Okay, bye for now. See you.